Hey, welcome everyone. Tom here from Park Avenue Trading, your Forex chief dealer, dipping his hands into stock futures, looking at the SPDR or the SPY 500 on the Russell 4-hour chart. And I have not, in complete transparency, it's something that I don't trade. Maybe I should. It looks like it's a lot of fun. Of course, it's a lot of fun if you can make money with it. So, but technical analysis is technical analysis. So obviously we got resistance at 612.95. This thing has been trading between, from what I can see, about 580 to 612. That's what it's been. So it looks like to me the marketplace is consolidating. Now there are rumors out there, and this is just talk in the street, that a lot of the big hedge funds have bought puts on the indexes. So there's a lot of, and the rumor basically saying that they're looking to tank the economy. Why they would want to do that, I don't know, and I don't really delve deeply into conspiracy theories, but they're basically saying that they want to block President Trump and knock down the index or the stock market down to it gives him, puts a little egg on his face. Now there was a huge amount of puts that were bought, thinking before when the tariffs were put on. Actually, it was twofold, because really he was supposed to announce tariffs in March, but he didn't. He announced them a lot sooner. And that threw the big boys off their game, from what I'm being told. So they bought a tremendous amount of puts right after the announcements. But then a day later, the tariffs were taken off. So now they're left with egg on their face. So what does it mean for us retail guys? Well, there were also a huge amount of calls bought. So they're most likely going to negate themselves. But concerning this is all, like me, just like half of a foot in the stock market. I listen to guys that trade it, but I don't trade indexes or individual stocks. I'm a Forex guy, but they do come to me sometimes for technical analysis. They say, what are you seeing on this chart? And I give them my analysis, and I'm about to give it to you here, as well as one of my people that follow me asked me to do an update on the SPY. So I'm going to do the best I can do and tell you what I see right now. As I see the market right now, I see support right now. Let me get a little ray out here at 600. Excuse me. Actually, I got it at 601.20. This is where I got support at 601. Fine, 601.13 is close enough. That's good enough for me. 601.20, that's where I got the support. So if we break this support, where can we go? Well, I got a projection that we could go down to, really an extension down to first level 595. Oh boy, this is so foreign to me. It's funny because the numbers aren't, what I'm used to talking about, like, 1.6, whatever, 595, like 20-ish right there. The whole main support for this index is at 572, way down here, 572. Oh, sorry, 573.76. I have the main support at, which is down in here in this little section. There's a low bars close that I'm looking at. Let me just pull this over. Right there, like this low bars close. Now, if we hold this, it's probably going to chop around this 600 a little bit still. So I would think that, support at the 595 would be a good level to take a peek at buying it. Now, where's a breakout on this thing? Well, obviously the top has been recently 612 even, right? So I would think that if we could get over, hang on a second. We have to get like over 607.50. 607.40 is close enough. 607.40 would start to show some strength to try to get us up through this 612.95. Now I'm going to do another calculation here where I'm going to start to add trend reactionary numbers, and I got to come back because I have to run the numbers. So I'll be right back. All right, so I added my trend reactionary numbers in. These are my own calculations, like wave calculations, and they're pretty damn accurate. Well, they are accurate on currencies, and I have used them before on stocks and also indexes, and they work out just as well. So I could say with pretty good confidence that they're very accurate. So we got a trend reactionary number right at 604, right here. So that would be the first level that would need to break and hold in order for us to carry us through. The next level, incredibly, is at 612. Now, I just figured this out, wave calculation out, and it's right at 612.95. A break of 612.95 is bringing us up to 620. So what am I exactly saying in this video on 1:21 in the afternoon on Sunday, February 9th, 2025, is that this marketplace right now is undecided, okay? And we are trading in a big rectangle like this right now. It's been bullish. It's in basically a short-term little natural reaction off of the high. I would be concerned if we broke 595.27. That would probably drive us down to this 587. But a break of the 604 and a hold of the 604 is basically showing that this consolidation is going to move up into here. So the points that I would watch would be this level. I might get rid of this stuff. Here's a 600 level. That 600 level is very important. Break 600 is probably going to 595.22, where I would think that would be a pretty good area to look to buy with a tight stop. A break of the TRN 604 would show that we're potentially going to try to take out this top here, but there's resistance, a trend reaction number at 612. If that goes with strength, we're going up to 620. So that's what I got as far as the SPY is concerned. Now let me get over to gold. Okay, gold analysis. Right there, okay, I told you was a support point on Friday. All right, the market was trading up here. Actually, it was right in here. I told you the support was right here. The resistance was right there. So it's pierced it a little bit, became right back down to this support. Okay, so where do we stand in gold right now? In gold, coming into Monday, 2008.73. Right there. 2008.73 is a slight resistance. If we can break through 2008.73, we're going to attempt the high, and we're going to start to move up to 2009.10. A break of this 2008.52. Drives us down to 2008.33. $2008. Where is it? Close enough. Right there. 832, fine, close enough. 2008.32, 2008.33. Gold is, yeah, it's in a bullish trend, but it doesn't mean that it can't retrace. The critical price that I determined on February 5th was 2008.15.60. A break of that would yield a 2007 790. So what am I saying here? I'm saying here that if the market breaks 2008.73, we got a chance to take out the 2008.88 and start going maybe 2,900 and then the 2009.27. A break below this critical price here, 2008.52, probably drive us down to 2008.33. So that's what I got going on in those two. And I guess maybe I could start tracking these. So if you like what you see, please leave a comment. Tell me what you're seeing in these, because I'm not by far, I'm a technical analyst, but like I don't trade these things, so I don't really have any type of intuition with them. Like in other words, I haven't been trading them for 30 years. I can understand the market as far as being a participant every day and understanding what's normal moves and what's not normal moves. So please leave a comment if you've been following them, been trading them successfully. Tell me where I'm off, or tell me where I got it right. Leave a thumbs up if you like it, and share the videos far and wide. And if you like this stuff, I will continue to update it. If it's not something of interest, well, I won't continue to update it. So I look forward to talking to you. And remember, always, always enjoy the party, but dance near the door. Cheers.